Good morning, everyone. Welcome to this live intraday strategy webinar on SB Trade Desk. Michael Boutros here with you this morning. Good morning to you, Christopher, Permendra, Mark, Eileen, Mario. Appreciate all the remarks, and it's great to be here, guys. So, um, there's been slim pickings these last couple of sessions, specifically on the intraday strategies. So we'll go over a couple of pairs I've been looking at. Now, as a disclaimer, guys, I'm actually completely flat across the board right now. I was holding a sterling position last night. We'll go over some of those crosses, but it's times like these where you want to just spend a little bit more time going through all your setups, mapping out your levels. We have FOMC minutes obviously on tap today, this afternoon. Look, these are the minutes from the October meeting. I was talking on Twitter with Mark yesterday. I don't know if you're in the room here, Mark McDowell, but these are the minutes from the October release. So it doesn't have in it any discussions with regards to the super strong NFP number that we got or any of the developments that have occurred since then. So we just will be looking to see a little bit more detail on where the committee stands as far as the rift within the members as to whether we should tighten or not. We already know that there was a 9-1 vote, and this is just going to be one of those added information docket pieces that we can get a little bit clearer of a picture of what's going on within the Fed. Not likely to be anything earth-shattering or new, but that's going to be the major event risk for the dollar for this session. You did just get housing starts weaker than expected across the board. You know, we were looking for a print of, what is that, 1,060. We got a contraction of negative 11% instead of a contraction of just negative 3.8. So a little bit of an upward revision on the previous month, but not really a strong print, lackluster print across the board. Building permits slightly stronger than expected with a little bit of an upward revision there. So mixed print this morning. You're not seeing much dollar price action. Wouldn't expect it to shift the reins in one way or the other based on this. Looking at the relative performance on the session, you can see Euro strongest performer up 0.2%. Biggest loser, Aussie Dollar down 0.24. This was highlighted in yesterday's radar charts too, that we're coming right into resistance. So we will discuss that as well. All right, so let's jump right into the charts. As always, if you have any questions or trade setups you guys are looking at, please feel free to throw them on the message board. A quick reminder, later today at 1 p.m., we'll have the midweek strategy webinar with Jamie Setley. At 2:30 p.m., we will be having the IDO search platform walkthrough, and we're going to be really excited about that. Mr. David Kedemy, who is one of the co-founders of IDO Search, will be with us on the webinar. Will give us a lot more background information, and I definitely encourage you guys to attend that later today at 2:30 p.m. Eastern. Okay. Craig, I see your question there. It's on a 5-minute trigger, so I'm going to jump into it real quick. I don't want you to miss that if that's the case. Here's the Euro Oz he's looking at. It's been a while since we got too involved with this pair. This is what I'm looking at. If you guys remember, this was a setup we were following last week. Let me just snap these levels for you. Okay, so we're holding within the confines of this structure right here, okay? And the 200% extension of this move, so if this is a double top, Craig, whether it's a triple or double top or whatever, a conservative measured move, you know, the actual measured move would be something like this, but the conservative measured move gives you a target at 49.50. We actually just took that out. Well, I guess that's yesterday. Right ahead of the Asia Open. So you could see some more upside. You said I just took a Euro Aussie short from a 5-minute trigger at 50.27, looking for 49.50, stop at 150.55. Okay. You are at resistance. Momentum is testing 60 resistance. The only thing I don't like about the trade, Craig, is that we're actually coming off of a pretty big measured objective here. So you might see some more upside. Let's see what the 5-minute chart looks like. Here's the 1-minute. I'd be looking at something like that. Let me zoom it out to a 5. Yeah, basically the same type of thing. You're basically waiting. There is a pending trigger that could give out at any moment here. I do like the fact they had some divergence into the highs, not with the recent two peaks, but with this peak here. So it could turn over. I wouldn't get aggressive on anything though right here, Craig. That's just my personal opinion. You know, you're at the lows. You've already achieved a major multi-week objective. So the propensity for this thing to give you a little bit of a topside pop is there. Just want to let you know you're at resistance, and I like the positioning. I'm not sure what you're seeing at 150.55 as your stop. Is there something there, Craig? Because if anything, I'd be looking at like the swing high from the 17th here yesterday. And that's just a little bit further out. And I wouldn't want you to necessarily push out your stops, but I'm just letting you know from a contextual standpoint, from a technical standpoint, that would make a little bit more sense. I would play it tight here. Okay, I would definitely play it tight. It just came off of a major target. Here's what it looks like on the daily chart, by the way. And not only is that 200% extension there that we highlighted last week, but you also have that median line parallel. And although we saw some dribble here earlier in the formation, you can see that the median line caught support and gave us a break clearly. Resistance. The median line parallel caught the high to the pip on that massive August 24th day. And here we are testing that confluence region. Okay, so I wouldn't be surprised to see this thing give us a little bit more of an upside stretch here. Craig, does that help? And again, if this breaks specifically on this 30-minute, another reference, if this breaks and holds and closes above 60, that would be the first 60 breach you've seen this week, certainly on any major magnitude since back here. So certainly the propensity for this thing to give us another pop is there if we break through at this point. Craig, hope that offers some color on Euro Aus for you. Okay, so let's jump right into the setups we've been following. So yesterday's radar charts highlighted Kiwi CAD. That was a setup that we highlighted on the previous update. He says, oh, it's just over the R1 and 4-hour MA. Yes, it helps. Thanks. My pleasure, Craig. I like where it's at as resistance. It's resistance within a downtrend. You know what I mean? So it does make sense, but we're coming off of a pretty big level here. That's my only concern. Kiwi CAD. That's what we're looking for. Good old Kiwi CAD. There's not really much to update here. I gave you a chart on the radar chart last night just because oops. Now here's Kiwi CAD. Just because we were still holding within the confines of this formation, it was like super, super clean. You came back and tested former support, the 100% extension, 86.26 is resistance. You're still looking lower while below 86.72. So we're looking for short triggers. It's been a bit of a chop fest, but it is on the move. So here's what it looks like. Kiwi CAD right now. You saw us probe into that high and overnight trade. You made a break again before moving lower. Momentum rejected 60 on the rally. And here we are kind of unchanged from where we were last night. So you could see another stretch earlier into the open of U.S. trade. I am still looking for short triggers. It looks like one is given out earlier today, right ahead of the webinar. But you didn't really see price action break the European opening range low. I think we might still have an opportunity here. Let me bring it up on the 5-minute real quick. I don't have it on the subscription on this account. Give me 1 second, guys. Okay, looking at 24 pip ATR, so keep that in mind. Stops need to be at 24 pips. Any stop that you take now should probably be against that 86.28 barrier. So you're basically just on the cusp of that. If you do get that break, yeah, you'd be looking for a drop initially into the lows. Watch that 80. I just want to say 86, let's call it. But the major target would be 85.70, and that's a nice key. 618 retracement. And it coincides with the median line off the high later in today's session, right into the open of Asia later tonight. So I'd be looking for an opening range break to the downside. I'd be looking for a short trigger to give out on a rally here for Kiwi CAD, looking lower. No change on that front just yet. Keep in mind, Friday does have some CAD data. You get retail sales and CPI figures on Friday. For the yen, you get the same thing. CPI figures and retail sales. So we want to make sure we keep that in mind. Sorry, guys, give me one more second. Yeah, I just wanted to make sure those are on Friday. Yeah, both those prints are on Friday. Oh, this is strange. My RSI2 shows it that it passed the 60 level. It went to 64.97. Pietro, on which pair are you looking at? And make sure when you're looking at the RSI level that you have the same settings. You might see something different. And sometimes when the markets are a little bit less choppy, I will reduce it to a 14 period ATR. Sometimes when things have a little bit more volatility, I'll move it to a 20 period ATR. It really just depends what's giving me the cleanest triggers. So I'll go back and forth on those. But if you don't have the same settings, it may look like you breached through that 60 level. Yep, he got it. All right. Mark Haverman says, after you go through over your setups, show your daily and 30-minute on dollar CAD, please. Thank you. Yeah, more than welcome, Mark. I'll definitely do that. You know what? Let's jump into the CAD crosses here. I don't have any pertinent trades that I'm in, so I got time. Any questions on Kiwi CAD? If we're going to see CAD strength, this is the one I'd rather play just near term because I'm not too keen on getting heavily involved with the dollar right now, especially on the short side. We talked about the dollar index. You know, here's what that thing is doing. You need to stay constructive above 12,123 in case you're not tired of hearing me say it. We've been saying it since last week. We turned just ahead of that region. We're now testing the high day close, which comes in at 12,204. Yesterday's high was 12,201. Okay, so keep that in mind. If we break through, you still have to contend with that sliding parallel, but you're essentially looking for an inevitable rally up into 12,354. And that's another measured objective of the consolidation that we were in for a couple of months there from the June highs. So with that in mind, dollar CAD is an interesting play, right, Mark? Christopher says, yep, US dollar still constructive, amazing. That's why I like your Aussie dollar setup. I had the same one. Right on, Chris. Yeah, I do like the Aussie too, right? If you have to play a downside approach, we'll go over that in a moment. I don't want to jump around, but Chris, I'm right on with you on that one. Kiwi CAD was my solution to playing CAD strength by way other than the dollar. And I do like, Kiwi CAD lower on a CAD rally, but here's what dollar CAD looks like on the daily. And then we'll jump into the 30-minute. So it's a messy trade. I don't really know what to do with it from here, guys. It's constructive, specifically above 133. 133, again, is the open for October trade and the 764 retracement of the decline off the highs from September, which was the yearly high. And we're still within the confines of this median line formation, believe it or not. So you're kind of mid-range. You're not at support. You're not at resistance. So for us, this is a wait and see. You have no triggers that have given out. Here's your support trigger off the low. That would be a nice correctionary play, specifically if we make it out the underbelly here. And you haven't broken 60 to the upside to really, irrefute the turn that we might be looking at here for dollar CAD. So I've been playing this one. I've been on just the sidelines here, on the radar here. Here's what it looks like on the 30-minute. And there is some things to look at, but that's all it is for me right now. It's not an operative trade. Here's what the dollar CAD looks like on the 30-minute. Let me zoom this out for you as well. All right. So we were in this formation for a couple of months. We broke out. Here's the rally, and here's the operative slope that you see on the daily chart. So it's been kind of messy, but as long as you're below the median line here, you could see a pull to test the lower median line. That's where we started off the week on this rally and failure. That was the initial idea. Haven't taken anything on it yet because we're still in the weekly opening range here. We haven't really done much. And the levels are what they are, guys. So take them for what it's worth. Again, I don't really have any conviction on playing this. If you do see a topside break, you'd be looking for initial targets at the 88.6. That's 133.85. 134.20 is the high day close for the year. So the levels are pretty clear. And again, for anyone who's new to the room, guys, feel free at any time to take a picture of any of the charts you see here by clicking on that camera button in the top right-hand corner of your GoToWebinar screen. Mark, does that help on dollar CAD? I wish I had more conviction on this for you, man. I mean, if it breaks out of this, again, this is a proposed pitchfork. You really don't have enough rebounds off it to work with it as a concrete formation. Looks like we're trying to break the highs right now. Momentum, just for the record, is still constructive on dollar CAD. Nothing's changed. And the way I can do that is just by looking at from the start of the week. 40 hold, 60 break. 40 hold. Didn't break 60, but you haven't broken 40 either. Here's 60. This is a constructive signature. And if all you got to do to kind of ascertain that is take a look to last week. It's kind of basically the same thing. 40 hold, 40 hold, 40 hold, 60 break, 40 hold, still looking higher, 40 hold, 60 break, still looking higher. And the momentum signature remains constructive. Now, if we fail ahead of 60 or if we fail at 60 here and break back below 40, I'd then be looking to sell rallies. So it's unlikely I'll actually take any positions on dollar CAD here until we break this range and give it a little bit more of a fruitful push. Chris is saying, or Mark, excuse me, saying maybe I do have to put MAs on my chart just so I don't lose track of trend. Yes, it helps, says Mark. My pleasure, man. Yeah, sometimes it can be helpful. I do it on the daily chart specifically. You're looking at the slope of the moving average, and also on longer term moving averages, they will offer support and resistance, specifically the 100, 200, and such. I'm not really a big trader of moving average crossovers or anything like that, but I think they can be helpful in the broader ranges. So that's dollar CAD. Hopefully we'll get a break of this range at some point. Again, if we do see this thing turn over as opposed to trying to fight the dollar trade, I'll be looking to play it by way of CAD, of Kiwi CAD. Says, thank you, Mark. Hey, my pleasure, man. Always good to have you in the room, sir. So, Craig, we took your question. Pietro, we took yours. Chris, Mark. Okay, I'm all caught up on that. Let's jump into the next setup from last night. Aussie Dollar. We did just touch upon this real quick, but I want to go over where this thing is positioned. I don't think it's primed for the pump yet, but there's a lot going on here. So just a quick sort of recap. We're still within the confines of this broader median line formation. This is multi-year, dating back to that high that you made back in 2013, specifically in November. And the monthly opening range is set. This is what I want to highlight on the daily. Your monthly opening range high comes just under resistance. Monthly opening range low comes just above trendline support. And you're looking for a break of this consolidation. Interestingly enough, momentum is also in consolidation between the 50 and the 40 region since the start of the month. So you look for a confluence break of the range in price action alongside the range in momentum, and that'll give you a little bit more of a clear-cut directional bias. The risk is with a breach above 72 that you see a much more substantiated rally in the Aussie. Okay, on the near-term charts, here's what we're looking at. So as I noted in yesterday's radar chart, the possibility for a breakout opportunity here is here with a break of this sliding, or excuse me, that's just a basic trendline resistance off the highs. And that would lead us for a rally into 71.54, 57. This is the 618 extension off the low. A nice pivot in price. The high from, I guess that was the 11th. That might have been the RBA or something, or employment data. In any event, that would be the first target. And then their second key major target is 72 to 71.98. This is a huge region. You have basic trendline resistance. You have the 100% extension off the high. Off the low. You have the 50% retracement off of the high and a major pivot in price in and of itself. Lows, lows, break, resistance, resistance, all of them coincide right here. Add to all those features that if this proposed pitchfork is in play, the median line, which has already caught the highs from last week, is right there. All right, so the levels are super clear. The invalidation level is just as clear. A break below 670, 67, 70, 65 invalidates that idea completely. Why? Because that would be a break of this formation, the key 618 retracement, the low day close, or I'm sorry, this is a longer dated 1618 extension, and that would take out the weekly opening range. So very, very clear on what level would invalidate that upside bias. If you look at the momentum signature, it's not bearish, okay? You did see that quick dribble below 40, but here's your 60 break, here's your 40 hold. And you're looking for possibilities for, a possible breakout here to the upside. Again, that would be dollar weakness on the break to the upside. So again, I would want to be very, very cautious on that move. But if there is going to be a breakout here, the levels are very, very clearly played. On its face, last night was actually an opportunity to jump into the short trade. And there was actually a trigger here I missed among many this week. But let's bring up the Aussie dollar. And here was the rally into that 430 opening range high for London. So here's where we were looking at with that. London opening range was a huge stretch. It was right from around 71 into 71.20. Actually, I'm sorry, this is just the opening range. Was a 20 pip opening range. So you maxed out at that high. You saw divergence all into those highs. Okay, the entire time before finally breaking down. So there's different triggers you could have used on this one. I would have been looking at that trigger there. 12. The high was 15. It was only a 5 pip, 6 pip rally above the highs. If you want to be a little bit more prudent, a longer trigger, a little bit more touch points would be something like this. And that trigger there would have put you in short again against the highs, looking for about 18 pips. So the Aussie actually had some beautiful triggers yesterday in London trade. So again, those of you who are trading overseas, you're still getting the cream of the crop, in my personal opinion, on most of these setups. And the divergence here is just another tell that near-term momentum is waning into the high. You're at key resistance, nice short opportunity. Again, remain nimble. This is going to be the bullish invalidation level. We really need to clear this median line and the highs to just validate a basic weekly opening range break. And you'd look for targets at 71.57 and 71.98. Questions on Aussie. This is the scenario that you want to, I think, take advantage of on a weaker dollar. If for some reason you do see that retail sales at the end of the week really pukes out, that'll definitely put a hamper on expectations for higher rates next month. I don't really think that FOMC minutes today can make too much of a dent in expectations for the same reasons that we mentioned earlier, guys. I don't want to repeat over and over again, but these are pre-NFP numbers, unfortunate tragedy that's happening in Europe, all of that. So I wouldn't be looking too much into it. We just want to see what the breakdown was and what the discussion was. If there was really a stronger discussion about concerns over keeping rates too low for too long, that might be fuel for the markets at saying, hey, look, these guys are ready to move. They've been prepping us. December is on point. Also, keep in mind that we've heard already from a lot of these FOMC officials. There's been a lot of speeches and all different types of interviews. So we've gotten updates post the Fed decision on where they stand. Nonetheless, that hits the wires at 2 p.m. Eastern today, right ahead of the IDO Search platform walkthrough webinar. All right, so we covered Kiwi CAD, Aussie Dollar, Dollar CAD. I just want to touch base on gold. Pietro says, I think if minutes talk about CPI could get us some volatility. Pietro, absolutely. More so than employment, for sure. Remember, out of the Fed's dual mandate, inflation has been the laggard. So right off the bat, you would expect to see that being one of the major things that they're looking for. If they see concerns over inflation slowing, that would be a huge thing. But don't forget, inflation actually came out a little bit stronger than expected yesterday. And one of their major, drawbacks or reservations has been this slow inflation outlook. So if you look at the inflation numbers from yesterday, they were in line broadly speaking, but the year-on-year slightly ticked higher. And the core year-on-year, which is the Fed's preferred gauge, aside from the PCE, personal consumption expenditure, is right steady at 1.9. The Fed's unofficial goal is 2%. So the numbers are there. We just got these, Pietro. If they do show concerns that inflation is slowing or that there's subdued inflationary pressures, yeah, you could see that. Hit markets. But again, don't forget, Pietro, that we just got these inflation numbers yesterday. So the inflation numbers we got yesterday are not going to be reflected in any of the commentary we get out of these minutes. These minutes are from last month. Make sense? All right. So to touch base on gold, he says perfect setup for news reversal. Christopher says we will see. Yeah, a lot of these pairs are some at interesting levels. The U.S. dollar will fall when the last bear turned bullish. LOL. It's a good mark to look for, right, Mark? It's definitely a good sign. Here's what gold looks like. So I just wanted to highlight this because we were talking about it in the webinar, and if you remember yesterday, it was just sneaking around that 1080 level, and we said, look, it came into resistance and slammed right back down. That's the biggest tell that you can get on Monday. That level was the former low day close for the year. It's also the low for September. It's also a 786 retracement of that August range. By the way, this retracement is null and void. The only reason I leave it on here is to highlight the August low and this key pivot range. We're not really going to stress the merits of that retracement anymore, but the levels are important. And the downside support target with a break below 1080 was right here at 1067. That's where we're sitting right now. I don't want to underestimate this 100% extension. That means 2 equal legs low for the year. This is off just this year's high, specifically the one that we made in January. So that's the next target. On a rally, you look to short it. Next downside objective, 1053, and that's a little bit more of a critical 618 extension from the decline off of the highs we made in 2012. It also coincides with a sliding parallel here, a little bit lower, as well as the lower median line parallel for the current operative formation over the next few days. All right. Interim resistance, look for 1080. Bearish invalidation is the level that we tagged on Monday, this key region into basically 1100, 1099. So the gold levels are clear. Again, for those of you who can't trade this stateside, you need to trade it on a futures trading platform. If you're trading overseas on CFDs, there's definitely might be an opportunity. It's too early to tell if it's something you want to try to buy, for sure. But on a near-term rally, on a turn in price, that 1067 break, you got a clear-cut way into 1053 on the low side. All right, so that's gold. I do want to touch base on sterling. Oh, hey, Mark is calling it out right off the bat. What do you think about the sterling yen right at the 50% of the entire decline? So here's what sterling yen, I was looking at it this morning, looks like on the daily chart. And you're absolutely right. It's testing that major pivotal region that we were talking about. If you remember earlier in the week, we highlighted this high day close from last September. It was the close high that we made in this rally here earlier in the month. We didn't clear it last week. We struggled again to make it through. The gap lower to open the week rocketed right through it into the median line parallel. Yesterday, achieved the primary or the secondary target with a break above 86.95. That was 87.80, and that's near-term resistance as we speak. Look at this mark. Keep in mind that momentum, my man, is sneaking right, holding 60 resistance. If this breaks on a pullback, I'd like to get back on the long side against this median line, looking for a rally up towards 189.56. Larger range ATR, 130 pips is the daily average true range on this one. Near term, I don't know if I have anything too compelling except for these median lines we were working with from last week. And you can see kind of straddling them here. So, whoop, here are the top side objectives. And there's that 89.56. Ahead of that, you have a nice confluence region right around 88.60, 88.53. On a trade like this, for those of you who are scalping this, you want to stay constructive above 87 with only a break below this region here. That's what we're going to highlight as our bearish invalidation, or bullish rather, invalidation level. It would necessitate a break of the median line structure we've been holding for the last 5 weeks, 6 weeks even, and it would also take us back below that swing low that we made there in trade yesterday. I'll tell you, the pound's been a tough play for me. I had a nice gain on a scalp for the short side yesterday. We took a little bit off. I didn't move the stop to break even, unfortunately. Trade turned around, an overnight trade, and surged right through and took me out at a loss. So it kind of net, I lost on that position for the sterling dollar short, which is I thought was going to be a no-brainer on the long dollar. It surged in overnight, but then it turned around. Here's what British pound looks like right now. It kind of is irking me, but I do like the trade still. It's such at a critical region, this 52.60 region. I still like the short side below it. And you've been getting rallies. You just got to be nimble. Like on this trade yesterday, we had 22 pips on the books, and I'm looking for 25, a quarter a daily ATR. Still reversed and went against me. So you can't look for the entire extensions on these. You got to be super nimble in this environment. Mark's saying it's difficult trading for a few weeks now. I completely agree. And that happens. Markets will go into cycles, and there'll be cyclical times when trend is just not clear, or you're getting a lot of chop back and forth. That's fine. We'll sit on the sides. And that's why, guys, I'll never write a piece for SB Trade Desk for the sake of writing a piece. If I really don't see anything, or if there's really nothing that's kind of in the works, it's best for us to sit on our hands, right? We're not going to just put a piece for the sake of writing it. So just know that if it's something we're highlighting, it's definitely something that's workable. It's something that we might be in at the moment. But in conditions like this, you got to be really, really picky and just kind of cherry pick your positions. But anyway, long story short, Christopher with a question here saying, Mike, just a quick question about instrument offering from FXCM. Do you think there will be a platform that will allow trade of commodities and indexes at some point? So Chris, it's actually not up to FXCM. It's a regulatory affair, and CFDs are banned from the United States. So the only way you can actually trade those assets is by way of futures accounts. That's not up to FXCM. That's something the NFA actually regulates. So Chris, I have no idea to answer your question unless they come out and change regulation. It's going to be a while before you see those CFDs available on the state side. Like I said, you can trade them. I traded gold for years, S&P futures, Dow mini futures, whatever you want. There is opportunity. If you want exposure in those markets, you're just going to have to set up a futures trading account. Okay, so sterling dollar on the daily, I'm just highlighting 52.60, really, really critical. If we break above that, you'd look for resistance up here, but that's not the base case scenario. Base case scenario is we hold this near term. Here's what it looks like on the 30-minute. So the position yesterday was based on a trigger that we got in momentum right here. And like I said, it actually offered some nice downside into the close of trade or into the open of Asia. I actually just took a little off right here, went to bet left my stop against the highs and didn't give us much downside beyond that. Keep in mind here into these highs, you saw momentum hold 60. There was a trigger on a 5-minute chart, and it's the opening range high and key resistance that we noted since the start of the week. So it's definitely worth it from that kind of trigger to jump into the position. You're not going to get them all, and specifically on the pound, notorious institutional traded instrument, you get a lot of these throwovers, we call them, break through resistance and close that candle even below. Classic sterling moves. So I am still looking lower. Unfortunately, this was actually another pivot and really clear trigger in to the short side in the pound and overnight trade, or an early, I guess this is European trade. So if you're holding shorts right now, it looks still pretty good. You might get a pivot around that upper median line parallel, so just look a little bit lower near 52. I'd start to take some off the table, but my target on last night's decline, which didn't hit, was 51.73. And actually, there is a little confluence region here today with the basic trendline resistance off the highs. All right. I also was looking at this morning, although I don't know if you necessarily want to play that, because even if this trigger does give out, you know, a stop against the highs here is way too far out at this point. You're only looking for about 25 pips per scalp. Don't forget, from UK tomorrow, you also get retail sales data as well. It's like retail sales week across the world. So we get retail sales from the UK into the close of week, Japan and Canada. Any questions on sterling dollar? Just a quick touch on dollar yen. I don't really have much to say on this, except that we're testing that critical resistance level that we highlighted on not yesterday's radar charts, but the previous day's radar charts, was right here. And we're just testing that resistance level right now. 123.42 into 123.54. Huge region of resistance. Nice confluence of a 764 of the entire decline off of that June high, and a 100% extension off of the lows. Gives you two equal legs up. Key resistance, if this does break, you'd look for a rally back up into 124.13, 124.35. And I think that's going to be a bigger level of resistance there. Mark Haverman says, I have to pay more attention to the pairs you guys pick, like the Kiwi Cat. It makes sense. Yeah, Mark, I mean, we try to highlight the trades that we're in, the trades that we're looking at for sure, from a standpoint of what the individual currency is doing against its major counterparts does just kind of make sense, right? And not only that, I have a little book here, guys, and you guys should probably do the same thing. You want to have a little sort of trade journal and just jot down specific pairs that you're looking at, specific levels. And when you come back, the first thing you do is I just open up my book, look at the last couple of trades, where have we moved? Okay, this one either falls out of focus, it didn't move what I thought it was going to do, it's not reacting to the levels I'm looking at, drop it, or, oh, okay, this is primed right here. I actually want to watch this for the next couple of hours. That way you're not starting your analysis from scratch every day, kind of like sitting in front of a platform wondering, where do I start? You know, the charts tell a story, guys, and you have to be up to date with what's happening in the story, otherwise you'll miss out. So just a little tidbit there, Mark, might help you if you find yourself sort of looking at pairs that might not be offering opportunities, or you're kind of getting lost on where you should be looking. Just keep a logbook on the trades that you're following, the key levels that you're looking for, and once we attain those, you know, you want to be ready to have your trade idea ready to go. Mark saying that's a good idea. I hope it helps, Mark. So dollar yen, watch this major resistance. If the dollar turns over, and again, I don't like the dollar pairs at all right now, but if the dollar does turn over against that high day close for the year on the index, you'd look for a pullback into the basic trendline support. Again, on this one, bullish invalidation still has to be left down basically at last week's low, 122.44. And that, my friends, is dollar CAD. I do want to take a moment to speak about Kiwi Dollar, which is at support. Quick note, any of the reports that we publish on Daily FX, on the intraday strategy page or the intraday charts page, you'll find them right here. On Jamie's swing trade or long-term trade charts, you'll find them on the bottom too, his reports from Daily FX. So just some added research there for you guys. But the last one I put out yesterday from Kiwi was, or the yesterday's report was on Kiwi Dollar, and that's coming into a support structure right around that 64.55 level. Here's what it looks like right now. Okay, you're still testing that same level. So by the way, 64.55, just for information, is the September swing high right there. And it was actually the low that we made yesterday. It was 64.51. So that coincided with the lower median line parallel there. This is the same parallel of the resistance slope from the highs that you saw in late October. And we were saying, look, you could get a little bit of a pop from here, but the bearish bias remains in place sub 65.15. So we're looking for a break lower. Inevitably, the broader target is at 63.90. That's the 764 retracement. If you take some projections of the current slope for that median line formation that we were in, remember we were in this for a while. We broke support, 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 break, acted as resistance on the way up. Here's the break of the lower median line parallel, acted as resistance. So the slope has been helpful, has been fruitful. If you take some projections out of these slopes, 1x, 2x converges right there at 63.95, 63.92, excuse me. All right. Eileen says, on the radar page, are the blue pairs more in focus than other? Oh, no. So the radar page, guys, if you're looking at these, if you're looking through these blue pairs are just pairs that we've covered earlier. So if you want some more information on this Kiwi CAD setup, you can click on this, and it'll take you to the latest Kiwi CAD report, which will have the scale chart and the daily chart as well. So Eileen, it just means it's a pair that we've been following or we previously published a piece on. So if you want background information on that, that link is there for you. Hope that helps. Christopher says, Mike, the trend line that caught the recent highs in dollar yen matches will be the internal equal legs in 124 area. Could be resistance there. Eileen says, should have clicked on them. Sorry, been out a bit of it lately. No worries, Eileen. No worries. You're in the right place. Any questions you have, guys? Let me go back to that one real quick, Dollar, for that one, Chris. This one? Yeah, it could definitely offer some resistance. This is the daily chart, right? So on a scalp, on a breakout, I would definitely be looking to do something up there. Take off a little bit of the trade, put some in your pocket, stops at break even or something. But this is a huge pivot. Guys, this is the yearly pivot. If you had to tell me what's one structure in dollar yen you'd watch, it would be this singular line. It's caught every turn. It's caught every single turn for the year. 1, 2, 3, major low. We turned ahead of it. The break on the rebound, reversal, reversal. So yes, to answer your question, if it breaks through near 124, that could offer some resistance. But this is what I would say. Who asked that question? Christopher. This is what I would say, man. If this breaks this region, the broader trade would still be well focused to the upside because momentum is constructive. It'd be a break of the highs, and it'd be a break of a major fib confluence. So I'd say with some confidence that if we do see this thing rupture through the highs, you're probably just going to see a run on 124, 1335 region. But definitely something to keep in mind, 100%, Chris. You want to look for some sort of reaction at this if it does move higher. Does that make sense? Mark says gasp, euro dollar trend line from October 2000. Christopher says yes, thanks, but I was thinking reacting lower. So yeah, I know you were, Chris. I am 100% with you, my man. I'm picking up exactly what you're looking for. You're saying that might be a great short opportunity from a scalp basis. You could probably get a couple of ATR quarterly ATR moves against that region, sure. But when I'm looking at a daily chart like this and it breaks a new fresh monthly high, which is a Fibonacci confluence region with a constructive momentum signature as the one we have, um, I'd rather look for resistance at 124, wait for a pullback off that, and then buy it again. It's just because it's dollar CAD, man, and dollar. It's just because it's dollar yen rather. And again, the dollar is on a really constructive path as well. So instead of trying to fight the uptrend, Chris, if it breaks and tags that, I'd look for the pullback to get long again. Now, truth be told, I'm probably not going to touch dollar yen this week, guys. I just don't like it from here. If we get a pullback towards the um, trendline support, it might be an opportunity. If you get the breakout and a trigger near that trend line or near this region, it might be nice for a scalp to the downside. But I'm not really interested in playing the short side of the dollar until I see dollar index show me a little bit more of a concrete turn in price. Chris is saying long Aussie dollar if it's coming into support around the same time. I would try, or he says I would not try to short dollar yen at this point, or really any dollar leading pair. Yeah, I mean, I'm with you on that, Chris. I would at some point. I don't want to say at any point. I would at some point on some of the dollar crosses. If I had to be short dollar, I think euro dollar is due for a little bit of a pop higher. And I know I keep saying that as this thing is just kind of melting lower, but there's some pretty interesting levels coming up just lower from where we are now. So if we come into that sliding parallel, or if we come into that 88.6 retracement, that might be a nice area. If you do see the dollar start turn over, this is where I'd look to play dollar shorts on something that's really stretched, as opposed to dollar yen, which is still essentially trying to break the current range that's in. Make sense? All right, right on. Let's see here. Euro dollar. Mark, I want to get your question. Trendline from October 2000 coming in around 105.70. Important. Let's see what you're looking at. It does have 3 tags, actually, so whoops. It could be. It could be a decent support structure on it. The 88.6 is just above that, right around 106 anyway, so I'm kind of watching that region. It's funny you just noted that, Mark, because I'm actually just watching that region for some support, specifically with the lower median line parallel here or the sliding parallel we've been following that caught those lows earlier in the month. Yeah, definitely could offer some support. I haven't touched euro dollar in quite some time. Remember, dollar seasonality on the larger ranges, 10, 20, 30 year, all peak at the end of this week. So could be a nice reversal play for April, yeah, Mark. But from where it stands right now, euro is just no play zone for me. Kyle says, can we review Aussie Kiwi? Sure can. Here's what Aussie Kiwi looks like. Another beauty. I think is just primed for the pump. Okay. You're at resistance. We highlighted this yesterday. Confluence of the 100-day moving average, confluence of the 618 retracement, and we ended up closing below that lower median line parallel. Momentum still has a little bit of room to 60, and it got a short trigger pending. You could get some more downside. I think this might be it. I don't know. Overnight trade, you came right into support and held. We talked about that 109.10, 109.30 level, 35 level last week. Huge region of resistance. We broke through. This is now support. The major range that you want to focus on heading into the end of the week is 110.20 into 109.20. That's basically what you're looking for. A topside breach here, and you're looking for a much more substantiated rally, even more than we've seen already. Also keep in mind that this region, the 100% extension rather, comes in at 111.13. We already broke the 618. So if it's going to be two equal legs down, if it equal legs up, if it is correctionary, 111.13 should be still a target to the upside you'd look for. But don't forget those operative trend lines. And that trend line, the main trend line off of the 2014 low is still resistance right now. Okay, so that's the key region that you want to be looking against. So not interested in long exposure from here at all until we close above this, in which case I'd be looking to buy pullbacks, inevitably looking for 112. Right now, actually on a rally here, you want to be looking for possible short triggers. We try to make a move on that trend line again and it fails, you might get another kickback. This was actually a really nice position. Really nice position. Hindsight's always 20/20, but this was actually really nice. It came right to that longer term trend, 618 on the dime. Probably would have been looking at this trigger in price, and I thought I adjusted this yesterday, but I guess not. Here was the trigger in momentum. Kyle, does that help on Aussie Key? I really can't stress enough how big this trend line slope is. It's real pivotal, and you're testing that as resistance right now. Kyle says, yes, perfect. Thanks, Mike. Hey, more. I appreciate that, Kyle. Anytime, my man. All right. We're through all of these. I'm going to go ahead and wrap it there if there are no other questions. If there are, feel free to post them on the message board real quick. Oh, Chris, I almost missed yours. He says, I know you don't use correlations, but I like using dollar yen to time my entries in things like Aussie dollar and euro. Kyle, Chris, don't misunderstand me, man. I don't want to say I don't use correlations. I don't stress corollary plays. Meaning, for me, if I'm looking to take a trade, I won't say, no, I'm not going to take a short dollar yen because I'm long dollar CAD. Those, every trade I try to take on its own merits. Now, when we see broader yen strength, broader dollar strength, broader sterling strength, sure, absolutely, you want to use that corollary play. Okay, pound is rallying. Which pair of its counterparts is seeing the weakest move? And then that's how I like to equate it. But I wouldn't say I don't use correlations. I just don't stress them as justification for a trade. That being said, Chris, using opposing pairs like that for entry is actually brilliant. I love it. I love it. In one way or another, I do that all the time. When I'm jumping into a position, I have 4 or 5 charts open. I'll be looking at 3 or 4 different setups. When I take that one trade, a lot of times I'll be looking at those other setups too to see if they're peaking, if they're giving us some justification that we're going to see that same cross-market move, right? So take it for what it's worth. Don't stress it and don't use it for justification, but it can certainly add conviction to a position that you're looking to take. Chris, does that help? Does that make sense? He says, thank you for that clarity. My misunderstanding of your position actually prompted me to do a lot more studying of that technique. Hey, Chris, I'm glad it helped. As long as the misunderstanding inevitably led to some benefit, then it's a win, right? All right, guys, we'll wrap it up there. Again, don't forget, 1 o'clock, midweek strategy webinar with Jamie. He's going to go over those setups on the swing side that you guys are following. And again, 2:30, we're all going to be here for the IDO search platform walkthrough with David Kedemi. So we look forward to that. Best of luck trading today, guys. Again, don't forget those retail sales and CPI numbers on tap into the end of the week from UK, Japan, and also Canada. All right, best of luck trading, and I'll see you tomorrow. Cheers.